50 veterans. 50 denial letters. And almost none of them should have been turned down. I went through 50 VA loan files that came back denied, real reasons, written in the lender's own notes. And what I found is going to bother you. Because in most of these cases, the veteran did nothing wrong. The loan was dead on arrival, and somebody on the lender's side knew it before they ever ran the numbers. So here's what I'm going to give you. 7 reasons a VA loan actually gets denied. Which ones are your problem, and which ones are the lender's problem dressed up to look like yours? And exactly what to do if it happens to you. Because this is the part nobody says out loud, a denial from one lender is not a denial from the VA. The VA didn't reject you. A company did. And a different company, looking at the same file, will often say yes. Stay with me to the end. Reason number 7 is the one that gets reversed the most, and the fix can take a single phone call. I've spent years on the lending side of these files. I've read the underwriter notes the veteran never sees. And once you've read a few hundred of them, the same patterns show up over and over. Let me start with the ones that aren't your fault, because those are the ones that make me the angriest. Reason 1. The house failed, not the veteran. The VA has something called minimum property requirements. The home has to be safe, structurally sound, and sanitary. Peeling paint on an older home. A roof near the end of its life. A water heater with no safety valve. None of that is about your credit or your income. It's about the property. But here's how it shows up on your end. You get told the VA loan didn't go through, and you walk away thinking you got rejected. You didn't. The house did. And the fix is often as simple as the seller making a repair, or you finding a home that was move-in ready in the first place. Write this down. If the problem was the property, your benefit is completely intact. You can use it on the very next house. Reason 2, and this is the big one. The lender's overlay. The VA does not set a minimum credit score. Let me say that again, because almost nobody believes it. The VA, the actual Department of Veterans Affairs, has no minimum credit score for a VA loan. So why do veterans with a 640 score get told they don't qualify? Because the lender added their own rule on top of the VAS rules. That extra rule is called an overlay. The lender wants a 680. The VA never asked for that. The lender did. This is the one that should make you angry, because it gets sold to you as if it came from the government. It didn't. It came from a risk department in an office building. And here's the move: when a lender denies you over a credit score, a debt ratio, or a "we just don't do those," that is your signal to take your file to a lender who actually specializes in VA loans, one who underwrites to the VAS standards, not their own. Same veteran. Same file. Different answer. Reason 3. The paperwork, your certificate of eligibility and your entitlement. Your certificate of eligibility, the COE, is the document that proves you're eligible. If it's missing, wrong, or shows you've already used part of your benefit on a previous home, the file stalls. This trips up 2 groups especially. Veterans using the loan for a second time who never restored their entitlement from the first home. And surviving spouses who don't realize the benefit can pass to them, and that they need their own form to claim it. None of this is a real no. It's a not yet. Get the COE corrected, restore the entitlement, file the right form, and the same loan that was stuck moves forward. Now, if you're watching this because you already got a denial letter, those first 3 are the ones I'd check first. But the next 4 are the reasons that are at least partly in your hands. And the good news is, every one of them is fixable. Reason 4. Residual income, read wrong. This is the VAS secret weapon, and most loan officers outside the VA world don't even understand it. The VA doesn't just look at your debt-to-income ratio. It looks at residual income, the actual cash left in your pocket every month after the mortgage, the debts, the taxes, and basic living costs are paid. A veteran can have a debt ratio that a regular lender would reject, and still sail through a VA loan because the residual income is strong. But if the loan officer doesn't know how to document it, they default to the standard rules and deny a loan that should have been approved. The fix is the same as reason 2, a real VA specialist knows how to count residual income. A generalist often doesn't. Reason 5. Debt and how it's counted. Sometimes the denial is real. A brand new car loan taken out 2 weeks before closing. A credit card maxed out during the process. Co-signed debt you forgot you were on. These move your numbers, and they can sync a file that was approved a month earlier. The rule here is simple, and it's the one I beg every buyer to follow. From the day you apply to the day you close, you freeze. No new cars. No new credit cards. No big purchases. Nothing. You can buy the furniture after you have the keys. Reason 6. Income stability. Lenders want to see that your income is steady and likely to continue. That's where gaps cause problems: a recent job change into a different field, self-employment income with less than 2 years of history, or commission income that swings hard year to year. This hits two groups in particular. Service members transitioning out, who have a new civilian job that just started. And veterans who went into business for themselves. It's rarely a permanent no. Sometimes it's a matter of waiting for one more pay period, or documenting the income the right way: a signed offer letter, the business tax returns, a continuity letter. The income is fine. The paperwork just has to prove it. Reason 7, the one I told you gets reversed the most. A single derogatory mark. A medical collection. An old account that was actually paid but still shows a balance. A reporting error that isn't even yours. Lenders see the flag and stop. But a lot of the time, that flag is wrong, or it's something a quick letter or a rapid rescore can clear in days, not months. I have seen denials reversed because someone simply called, documented that a collection was paid, and had the credit repulled. That's the phone call I promised you at the top. Before you accept any credit denial as final, get the exact item in writing and check whether it's even accurate. So you got denied. Here's exactly what to do. 1. Get the real reason in writing. By law, the lender has to give you an adverse action notice that states why. Don't accept, you just didn't qualify. Make them name it. 2. Match it to this list. Property, overlay, paperwork, residual income, debt, income stability, or credit. The category tells you whether it's fixable today or fixable soon. 3. If the reason was an overlay, a credit score, or a misread debt ratio, take your file to a lender who lives and breathes VA loans. Not the bank you happen to use. A specialist. And 4. Remember the one sentence that this entire video comes down to. The VA didn't deny you. A company did. And companies disagree with each other all day long. If this helped you see your denial for what it actually was, subscribe, because the next video breaks down the VA funding fee, who pays it, who never has to, and how to get it back if you already paid it. That one's worth real money to a lot of you. I read these files so you don't have to walk into this blind. I'll see you in the next one.